Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for October 17th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 362. My name is David, and I'm the creator of Timing Research, and you should be seeing my screen right now. But we might switch to one of the other guests throughout the show. Today, I have arranged for Markus Gabel and Sonny Harris to be here as today's guests, and also the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, everybody, we are here, and it's going to be a big active day, so we're going to have a lot to talk about. Markus, we always introduce everyone before we get started. So Markus, could you introduce yourself and give a little background on what your company's doing?
Yeah, of course. Thanks for invitation here, and thanks for being here and having me here, David, and all the other guys. I'm from Germany. I'm almost 52 years young, and I have my own company. It's Know-How Trading, and I'm doing trading for 23 years now. And I was struggling for 7 years to learn it by myself, but it was not really successful. Then I got my first mentor, and he taught me how to trade trend following. And until today, I have 4 mentors. They still support me and encourage me to teach my own students. And my trading style is really simple. It's trend following and trading out of the correction if you have a valid trend. Yeah, I'm doing this for 23 years now. And actually, I support and educate 110 students in my class. Mm-hmm. And with 3 webinars a week. And I do it in both languages, in German and in English. Mm-hmm. So I have 6 webinars and different other webinars and by personal coachings. This is what I'm doing because traders have to learn to be disciplined at all and follow the rules, because trading is not investing. Trading is a simple game of math. It's a zero-sum game. So therefore, you have to learn to have a mathematic edge in trading, and you only can survive and become successful in trading if you are disciplined and follow the rules under all circumstances. And this is what I'm doing every day in daily chart and 4-hourly chart, and euro dollar I trade in hourly chart.
Mm-hmm. Yeah, chasing hunches and hot trades generally doesn't end very well. So having a nice discipline, which you're going to be able to illustrate a little bit as we go into the broadcast, right?
Yeah, I will.
Great.
Yeah.
Okay, great. And Sonny Harris, a little background on yourself as usual, and a little bit of what's going on currently over at Money Mentor.
Well, I'm a mathematician. I have been trading for almost 42 years now. Starting in January, it'll be 42 years. And pardon me, I've created my own indicators that I trade with, primary one called Sunny Bands, and I think you'll get to see these later. And I have moneymentor.com has free things for you. There's a free podcast. There's a free Sunday night newsletter. There are free webinars that I do. And what else do I offer free? Lots of things. Live demo tomorrow morning at 10 a.m. California time. So that's about it, I guess.
Yeah, that's the great way to get acquainted with your stuff and then, pursue it further from there. But at least if people get a little bit of a taste on what you could do for them.
Yeah, that's a great idea.
That's important. Okay, well, it's Monday, and it's the time where we basically will go over and ask what the market may do between now and the end of the week. And let me just get some kind of a reference point here today. I guess the market, obviously in this kind of a day, the market has been all over, but using SPX as a guide, which is the S&P 500, we're going to get the starting point today of 3638. So that's the opening today, 3638. Where will we close on Friday? Up, down, sideways, and what's your confidence level? Let's start out with Markus. What are you thinking here? 3638 S&P. We're going to be higher, lower, or what do you think?
Yeah, I guess it will be higher at the end of the week. Maybe you remember our last show we had 4 weeks ago. I said that was my intention that the S&P 500 is going more short,
Right.
and that was happening with a little bit correction in between October the 3rd, 4th, and 5th, and then the next push lower up down to 3,500. And since then, last 2 days, we see a kind of stabilization, and it's a little bit hard stuff, but I'm quite sure, I think we go a little bit higher at the end of the week, kind of sideways, but maybe a bit higher because we are going short since beginning of this year. And actually about the price, we are really cheap in the price. So I guess the first big investors will grab the first prices. So I guess a little bit higher at the end of the week.
Sure. What's your confidence level? And is there any fundamental or technical indicators behind that are giving you that insight?
No, not really. I'm just a trend follower, and I can see we have a long-running downtrend right now, and we reached a level which is really, really cheap in this price. And we are still in a stage of big fear in the market, and in this stage, the first big investors will come back to the market. So it's a kind of stabilization this week, I guess.
Yeah. And when you talk about the volatility, you think that elevated VIX in that mid-30 area is a little bit of a supportive thing because the sentiment has turned so negative down there.
Yeah, I think so. So 3,500, 3,550. It could be a really big support zone. We could see the last 2 weeks that people come back at this price. So it could be really interesting that we see a little bit higher prices, not that much because the trend is still down. Yeah. And the downtrend will break around 3,800, and this is a big deal at this point. So, but between 3.5 and 3.8, I will be circling around this week.
Sure. Okay. And Sonny, what's your feeling? 36, 38 is our starting point, and how do you feel the week will work? And what's your confidence level and things that are motivating you?
Well, the price right now is at my dynamic moving average midline.
Yeah, this is a good time, Sonny. This is a good time to share your screen so people can put your words into a visual. And again, just before we get started, just a little quick explanation of what they're looking at, like what are the sunny bands? And
well, the sunny bands are built around. Can you see the screen now?
Not yet.
Yeah, I can see.
You can see.
Okay. Yeah, I can see.
Sunny bands are built around my dynamic moving average, and I created that because moving averages give too much whipsaw for me. And I found a long time ago I could catch the trends and then lose money in the sideways and catch the trend again and give it back in the sideways periods. So I created some proprietary mathematics that gives me a special moving average called my dynamic moving average, or DMA, which smooths out the trends and ignores the chop. So the sunny bands are 1.2 and 2.0 average 2 ranges away from the DMA. And we are right now, you can see right here, hitting that DMA line, which is sloping downward. And I think we're going to go on right down to here at 35.50.
Okay. So, Marcus was saying that's the support zone. So that's not outside of what he was thinking, a little bit of a sideways action. And also that neighborhood is a support. So it kind of coincides with your stuff as well, which is good. And then you're pretty confident in it, on a percentage basis, more likely than not.
I would say we're 70%.
I got you.
That's a big number for me.
It is. That's just, you're coming away. They say you're coming way off the bag for that one. Way off the bag. It's the baseball playoffs, so I thought I'd put in a baseball analogy. You're coming off the bag. By the way, your Padres are doing quite good down there, aren't they? Or they had been.
I don't know. I'm afraid I trade. I don't watch sports.
You're not watching it too much. Okay.
Yeah, sorry.
All right. So anyway, with regards to Marcus, do you want to share your screen now? And
yeah, just give me a sec. Yeah, here we go. Here we go. So you can see the yes, and this is my daily chart. And what I can see here is that we have a kind of break the trend break here was that point here around 4,209. And since that time, we saw this lovely, wonderful downtrend, as you can see here. And as we talked in the last show, that was the big deal. That was the big inflation numbers here. September 13, that was the big rebound here. And there was a great chance to go short. And now we are in a new trend arm here. And now that was not happening here. There was no trend continuation here. That just was here to pick up the stops and bring the buyers back into the market. And this is what I think that could be a kind of support zone here, 3,572 roundabout. And you can see I work with Heikin Ashi because it's more easy to see the trend instead of normal candles. And as you can see, I don't work with any indicators because I don't need any indicators, because the trend, I just trade the trend. And actually there's not a trend continuation right now. So therefore, kind of here, this support zone here. And this is what I can see, that we have three balanced candles in a row. And today we have kind of rising price a little bit. So that's what I think, that we go up a little bit, but because the trend will break, the downtrend will break at 4,176. And what I think is that we see the next days, next weeks, that we can see, that we see this kind, and then a new trend, and then we're going up again. Because if I can see that, where is my market profile? The volume zone. So we are circling around with the point of low. And this is why we could see a lot of buyers here, because the price is really, really cheap. And in the futures, in the December contract, the point of control, the fair price is at 4,146. And we are circling with this point of low. That's the edge between the normal price and the really cheap price. And this could be double low, something like this. And that could be the start, the kickoff to go back to the point of control, 4,145.
Yeah. And again, you know, some things that are happening that could make these things happen is the dollar dipping a bit, and earnings coming out very strong, and the seasonality of the fourth quarter. So there is a lot of things that could turn positive, surprise people. And that recession that people are looking for, if it's delayed into 23 in the short term here, that may not be a big problem. So yeah, I think you're onto something. You just said something about you trade, like what stock index do you generally stick with?
Of course, DAX and Dow Jones, but actually I have euro dollar in my focus. Should I show you?
Yeah, are you talking about the euro dollar interest rate market, or are you talking about the euro versus the dollar?
That's 60, that's the future here, but we can also show, let me show you here.
There's a euro dollar that has to do with an interest rate situation, and then there's a euro dollar kind of, you know, how the currency is. Are you more on the interest rate situation or on the currency?
More than currency.
Oh, okay, so you're talking, yeah. And that's having a great day, I'm sure, today.
Of course, yeah.
Mm-hmm.
And this is just here, the euro dollar. And here in daily chart, this is really, really interesting. As you can see here, we have in euro dollar, we have this big downtrend also since end of May, and we have a long running downtrend. And what I can see here is this lovely new stabilization zone here, a little bit below the parity here. And that was on last week, the October 13, there was a balanced candle after the last move to the downside, and buyers came back, because if you can see, the normal price is way far away from the current price, because the normal price, euro dollar currency, is 118. So we are really, really cheap in this price. So I'm quite sure we will see a big recovery for the next week.
Yeah. That 95 obviously was a kind of a blow off low.
Yeah.
And, basically, I think you're kind of talking about what they call reversion to the mean, meaning the mean is at those higher levels, and sometimes the market will revert towards those means as a means of equalization, I guess, huh?
Yeah, I think so. I think so. It's. I think the parity was a big deal, and in my opinion, what I can see here, it's the euro is not that worse that people think it's worse.
No.
So, but I think we go back to the parity and we go higher, because I guess it was a kind of trick to scare the people a little bit, to think the euro is so bad. But we will increase the rates in the next decades, I guess. We come closer to the dollar, so people will buy the euro, I guess.
Yeah. And the European companies are actually reporting some reasonably good earnings, are they not?
Yeah, but don't forget, we have really bad decades about COVID, so they're coming a little bit back. But what you can listen or what you can read between the lines here in the newspapers over there in Germany, especially the small companies, they are really fighting with the big energy costs.
Right.
And this is a really, really big problem. So we will have a big bankruptcy wave for the next, I guess next year we have big problems over there in Germany or in Europe with the small companies over there.
Yeah, because Mercedes announced extremely surprising numbers, and I think their sales were actually up 28% or something. So there are some, the bar is very low over there as far as expectations. So sometimes when like you're saying, cheap and low expirations, it's not that hard to surprise, you know?
No, not really. If you're already cheap, the surprising effect is not that much.
It's
so
already
been kind of trick.
Yeah, you got it. Sonny, what are you seeing as far as some of these other markets are concerned? Let's just say something like the euro. Do you have an opinion on the currency, the euro, or
I don't look at currencies.
You want to put it up on your Sunny Bands though and take a look at it?
Okay, what's the symbol for us?
Yeah, well, I think the symbol that he's looking at is EUR/USD. But let me just see what else you could use.
No, that one. EUR/USD. Not getting anything come up.
Yeah, I'm trying to on my machine as well. I'm having a hard time.
Why?
Euro currency. I don't know.
You want to take over the screen, so I stop there?
No, you go ahead, Marcus, and leave yours up till I find something.
Yeah.
Stupid technique.
Marcus, while she's looking that up, do you want to put another market up that people might think is very cheap? Why don't you put up the price of gold? Oh, you got it? Okay.
I got it. You want to share again? Marcus, what software are you using?
It's a Adrena Trader. It's a Adrena Trader. I work with 12 years now, and I developed it a little bit. Yeah, and
can you unshare your screen so I can share?
Yeah, of course. Yeah, of course. Now you got it.
Thank you. Okay, euro dollar down. Hit the midline right here. It says purple's on top, and there's the midline where it's hitting. I think we're going to go on down a little further. We're going to come back down to this lower sunny band, lower outer band at 96 cents.
But it is pretty oversold from the other higher bands, is it not?
Well, it's
like if you looked at the 1 year, the 5 year, or something like that, something that has a little bit of longer time perspective. I think your bands would probably show that it is pretty far away from the mean.
So this is the monthly chart, and it is pretty far away.
Yeah. So I think Marcus's concept is it's going to down here at 96, 95, 97, whatever is a zone where it may find a support to maybe run up.
Very possible. Very possible.
Yeah.
But when you're following these sunny bands down like this, they tend to stay between these two lower bands and just continue until I get, and I use blue candles instead of green ones for up. But until we get a blue candle that comes up in above that lower inner band, we're not going up.
Why don't you throw the yen up there since we're talking about currency? And of course, that's in the same mud that the British pound and the euro's in. Are they all going to come out of the mud or not? Let's see. Japanese yen.
JPY-USD.
Yeah, they did an intervention that didn't work out so well. Probably the same way the British pound intervention is not going to work either.
JPY. There we go. dollar versus the yen.
It's incredible. It's a lovely trend. I love it.
Mm-hmm. Inverse, right?
It's a wonderful
Inverse to the
long-running
euro.
trend.
Yeah.
Yeah.
Well, that's because they're consistent. That's what you want.
The sky is the limit. The sky is the limit.
It's
Yeah.
like anything else. Be consistently bad or consistently good, but just be consistent,
Yeah, at least predictable.
Right.
Yeah, I saw some numbers that almost 90% of all private traders are short. And I told my students this morning, as long as the people are short, the price is going up and up and up.
Right. True.
The boat is too lopsided, huh?
Yeah, but the people think, okay, it cannot go higher. It cannot go higher. It's just an opinion.
Yeah.
And as long as the people think it cannot go higher, it can go higher, and it's going higher.
Yeah.
As long as it's going up, it's going up.
Yeah.
Well, since we're looking at things that are on sale, you want to look at the gold and silver prices, because they're definitely been on sale. And gold went down to like 1,600 and change. I don't know. Do you follow that at all, Marcus, or no?
Yeah, gold is trend following, is absolutely short trend in gold.
Yeah.
And it's really cool. Even in 4-hourly chart or in daily chart, it's really, I think there's much pressure on gold, and it's there is a lot of space to go short, to go down in gold. The silver is a little bit better, but gold is really much down.
Yeah.
And as I see it, it's right at the lower inner band, and it's going to go on to the lower outer band, which is at 1561, I think.
Yeah.
So we've got to move on down to that level, which, I mean, and I call support and resistance, moving averages, all those kinds of things, attractors. And you can see back here, look where it hits it over and over and over again. So right there confirms the sunny bands, because it's a heavy attractor, strong attractor.
There's really nothing on the on your stuff that would indicate some massive turn anytime soon.
Not in my work.
Yeah. With regards to the price of crude oil, you guys, I mean, obviously the whole world is long these oil stocks, and today they're having a great day. Last week they didn't have such a great time, but there's a lot of people really thinking 100 and 120 crude is in our future by next spring. And does that look like it could happen? Let's start with Marcus.
In daily chart, if you check oil, it's really short. So the last correction went up to 91.70 roundabout, and now since the last 4 or 5 trading days, we're going short. And we are in the third trend arm number 3. In my world, of course, a trend drawing without any indicators, something like this. And the deepest point, around about 76, we should reach the next days. It's possible. It's possible. Trend following, it's possible. So oil is still short.
Is it like getting above, say, 87.50 or something? Would that change your tune at all? Because it does look like it had a correction. It held this 84 area. And now if it gets above 87, would you say that it could be going back on the races, or?
Not really. 87, 86. So the last 0.3, which is the last correction point, is 96.
Yeah,
so
that's up there. Yeah.
Yeah, and that everything between 96 and the lowest point 74, it's just in the correction. And either we see a higher than 96, then we see a break of the downtrend, or we're going low to 74, and then we see a trend continuation. Actually, the trend is really young. It's trend number 3, and the probability is 70% in trend number 2 or 3 that we see a trend continuation, and therefore we go down to 74.
Yeah, it's right. It's very much at a pretty critical zone here. Yeah. If we start seeing it break under 85 and 80, you're 100% right. I think those 70 numbers and maybe even below could happen. So and it would surprise a lot of people, which is exactly what happens. In other words, it would shock people if we went into the 60s on oil, and shocking people is what these markets do, right?
Yeah, the point is the fair price, the really fair price in daily chart is drum roll 51.
Yeah. So
that could be shocking.
Yeah. Like I say, I mean, because everyone is definitely on the boat of, there is no oil, and they just did production cuts and everything else.
Yeah, yeah.
But, maybe they're cutting because they can see a recession coming and they can see the demand going out the window. I don't know.
Yeah, but market is going through. It's always looking 6 months in front, in advance. So maybe it's a little bit too late. But actually, I think we're going lower for the moment.
What do you think on the crude as far as your technical work, Sonny?
I agree with Marcus. I think we've got lower to go. We've got this nice trend line right here showing lower. It hit this, it's come back down. It's under my DMA right now. It could easily pick back up and go above that, up to the upper sunny band, but I think we're going down to the lower sunny.
And of course, these guys, if the prices do start fading and these people want to make the same amount of money, they may actually increase their pumping. And a lot of times they cheat on those quotas anyway, right?
Mm-hmm. True.
So that's interesting. Well, we see the dollar and we see a little bit of a dip there. We see the crude oil on a ledge here that might turn one way or the other. The gold and silver are still a little bit under pressure. Any other markets, Marcus, that you are kind of at least looking at a little bit? The international markets, you were looking at the DAX. People can buy a thing called I think it's EYG, which is German ETF. And that German ETF, if you put that up, EWG.
EW or EY?
No, EWG. It's the ETF for iShares Germany. And it would be interesting to get Marcus's take since he's a local. What do you think of that thing? Because it does look like it had a double bottom maybe. And is it trying to get going somewhere? Because it's way down, obviously, as everything else.
Yeah. I was really way down. So actually, I'm long in DAX since when? Let me see, because I'm trading in hourly chart. Yeah, I'm long since end of September. I'm still long since in DAX future DAX 11,948 roundabout, and today we got the last high around 12,780 round. That's really cool. We saw a big dip down again into the correction, but I guess we saw the last lows. So everything's turning around in hourly chart, 4 hourly chart, and I guess we saw the lows.
Yeah, because it does look like September was a great time to take a look at it. On this ETF, it was about 19 and change. Yeah. So it's already getting moving up towards, and as you say, it is way underneath its shall we say normal price, huh?
Yeah, actually, yeah, indeed. And don't forget, you mentioned it a couple of minutes before we go to the seasonalities to the end of the year, right? And the force must buy, and I guess we saw the turnaround in between right now.
Yeah, they have to call the dogs off when you think about it, because think of all the people that have been losing their money in the bond market and losing money in the stock market. Yeah. And they're probably losing their confidence. And there's trillions of dollars in this thing. So the last thing they need is for everybody to hit the exit at the same time while they're tightening money and credit. So if they get a bounce, people will be a little happier holding on into the new year, and maybe they do reinvesting in January, who knows? But it certainly seems like they want to call the dogs off of these markets, because they've been brutal to a lot of people out there. If you're holding a 60-40 portfolio, I mean, how many people are doing that? Many, right? And pension plans and things like this, these guys are in rough shape, huh?
Yeah, but we have different situations in Germany. The German trader, the German people are more on the how should we say, on the security side. They don't. In Germany, we don't have that much traders, and they hate this kind of unsecure things. So we can talk about whatever we want in Germany. Really less people invest in the stocks, really less people. It's completely different.
Is it mostly real estate and just cash? Or?
Yeah, just cash, almost the safe things like life insurances and
the annuities and things like this.
Yeah, exactly. Then the kind of bonds, you get a guarantee. For that what you have. This is what we do in Germany. So it's completely different to USA, and we can talk and talk and talk, and we can tell the people here in Germany, this is what I'm doing every day, guys. You can invest in stocks if you are disciplined enough. It's much way better than the guarantee guarantee of anything 2% or 3%. Who cares? We have a damn it inflation of 10%, and next we will have 12%. What do you want to do with 3% of guarantee?
Yeah.
So that's really stupid. But German guys are times.
Yeah, they're used to getting into fixed contracts or into real estate, or they own a business and they know the business will create money. That's the way they mostly go. Because I was playing golf. I was playing golf in Portugal with some German doctors, and I could tell they were definitely not interested in anything with the stocks that much.
Yeah, doctors are the worst.
Of course.
Especially the teeth doctors, dentists.
Oh God. Let's look at different parts of the stock market. Like we've got a thing called the small caps, IWM. And what does it look like on your stuff, Sonny, with the Sonny bands, IWM? Is there a real value here on the small caps?
It looks like everything seems to be hitting this midline right now. Purple's on top, which means down. We've hit that midline. I think we're going to drop back down to probably right here, which is the lower inner band at 166.74.
Okay.
I think we're going to drop down and test that. I don't think we'll go lower than that.
So you think it might
not right away?
Is it? Yeah, right. You think temporarily for the fourth quarter, we may have seen the lows down there at around 165 or whatever?
Very well might have. 164.06 is what I've got for the lows.
Yeah, I got a low here. Yeah, 162, 164. So that neighborhood you think could hold up. There is a little bit of a double low there, so that's somewhat interesting. Boy, it's hard though.
It's hit it 3 times. Once back here at this yellow dot, once at this yellow dot, and then again yesterday. Yesterday was Friday.
Yeah, and since you're on there, why don't we throw the Qs up there, QQQ, and that'll give us that's
down 33%.
Yeah.
So, and it's
because I guess the big question in people's minds right now is there going to be a fourth quarter rally here, and have we seen the lows? And if the answer is yes, we are, and yes, we have, then they have something to hang their hat on.
Well, I'll tell you what, I do a free podcast every Saturday. I interview somebody famous. And this past Saturday, I interviewed Larry Williams, who says his cycle work shows that we're going to go up sharply in the fourth quarter.
Yeah. Yeah, we've had 3 instances this year where the VIX hits the mid-30s and we're way away from the moving averages. And in each time, we've had a very substantial move of anywhere between 400 and 600 points on the S&P. And the setup is exactly the same. So again, it wouldn't be shocking if it happens, but I don't know that we were hiking rates this fast going into those periods either, because 75,
See the histogram on the bottom, green and purple, red and gold lines?
Yeah.
It has a buy signal on it right here.
Yeah.
Last 3 days, buy signal.
Yeah. So it's the same set. Hey, listen, we've seen this movie before. VIX goes up to those high areas, markets in the tank, gets way away from the moving averages, and it's a reversion to the mean.
And I require for my trading that when this thing turns green, I wait for price to confirm. Likewise, on the top, if it goes red, I wait for price action to confirm. And it really hasn't quite done that. It kind of has, but I'm looking for one more bar up before that's interesting to me.
Yeah. Also, I don't know, do you use relative strength index at all, Marcus, or you have a discipline and that's it? And relative strength is not in it.
I have my own relative strength.
Yeah.
No, I don't use. I don't need any indicators. I just have the trend and the price action.
No, believe me, there's a lot of truth to that. But for the relative strength index, sometimes if the markets make a new low and the relative strength does not make a new low, in fact, it goes nowhere near the low, that is what they call a divergence, and it shows an exhaustion. And we just had that happen in some of these markets when we went down to 3,500, or this QQQ went down to what did it just go down to? 250, 254. The RSI was at a much higher level than it was the last time we made a low. So
I put the RSI on this chart for you. You can see I've got a downtrend line on RSI, but it's hit lows. What's that? The 20 line. It's hit that over and over and over again. It could be a bounce there, but it would have to break this trend line.
I was looking at a longer term graph called the 5-year graph, and in the June low, we hit a 30 on RSI, and in the low we got in October, the RSI is at 38. So 38 versus 30 is a reasonable divergence. And of course, we have come off of those numbers pretty good. So there is some, what they call anecdotal evidence that keeps adding up that a rally could definitely occur,
Good.
Yeah, no doubt about it.
Yeah, can I say something about this?
Sure.
Earlier in my so-called trading career, I worked with RSI and MACD also, until my mentor said, can you break it down into rules? Because everything is rules. If you can see this divergence, the divergence is one of the coolest thing you can see in the charts and in any kind of indicators. It doesn't matter if you need Bollinger Bands or RSI or MACD, it doesn't matter, but you need rules for this. What do you do if you see a divergence? Because it's a game of math, it's zero-sum game. You need rules for this because you only can work with probabilities. There is no guarantee. So today it might work, this divergence, but what is tomorrow? What do you do tomorrow if the same situation is already there again? So do you have rules for this? What do you do if you see this divergence? Where is your entry? Where is your stop loss? Where is your target? And I think maybe our listeners should know this. If you work with any kind of indicators, it's really pretty cool, but you need rules to use them. And you have to understand it's just only probabilities and no guarantees.
Yeah. And this is anecdotal evidence. So it's not something you would trade on, but it's anecdotal, meaning it is something because of that situation, it would be pushed onto the bullish camp, but it would not be a trading vehicle. And what you're saying is when you're dealing with real money and real trades, you want to deal with the real price. And anecdotal evidence is nice, but it's not a trading system, right?
Exactly.
Yeah. No, and I agree with you.
That's why I have a manual that you can download for free on my website. And it's my indicators manual. It tells you exactly how I use Sunny Bands. All the rules are laid out. I've been using this indicator for 35 years, so I'm real used to it, but the rules are all laid out in the indicator manual.
Yeah, the key is you have a discipline. I don't know that there's any one discipline over another that is the premier discipline of all time, but having a discipline at least puts you in a situation where there's a plan and you're executing a plan.
Right. I've taught more than 1,000 traders privately, and I have never found any two that have the same plan.
That's true.
I was wondering, Marcus, do you ever, I don't think you trade these things because you do trade basically the S&P and then the euro, so the currency and the stock and the DAX, of course. But if you put up something on your screen like soybeans or something like that, some of these agricultural markets,
of course.
Does your discipline give you any, or could your discipline give us an idea of what you see on soybeans?
Can I share my screen?
Surely.
Oh yeah, please. That's the idea. I would like to, I'm trying to throw different markets into your system and see what your system might be saying. You see what I mean?
Yeah, it's really interesting because this morning I told my students, look, there we have soil, we have beans here. And as you can see here, it's a very interesting situation because in beans, for example, we have one downtrend. It started here in mid of February this year. And this is the downtrend. And here we were in the correction. And there was a big signal here around about 1457, and there's a short signal, and the red arrow means that's the stop loss. It's saved this trend already, but on the other side, the correction is running in its own trend, and it's simple. And there was a signal for the long. So in a real market, you cannot go short and long at the same time. You need different accounts for this. But for example, if you work with kind of options, or if you work with kind of CFDs or whatever, then you can go long and short at the same time, which is necessary for a trend follower, because sometimes you have the main trend and you have the corrective trend, and you will never know which trend will continue. So therefore, in beans, we have a big downtrend, and the normal price here is exactly where we are right now. And this is one of the reasons why we have this kind of sideways phase right now, because we are circling around the fair price. Actually, we were really expensive here on the upper side, and now we came back exactly to the point of control, to the fair price. And this is the reason why we're circling around at this current price here right now. But basically, we have two trends. The main trend is down and the corrective trend is up, and you have to trade both trends.
Gotcha. Hey, could we go over some individual stocks? Could, they're fit into that we're way oversold thing. And I think people probably are watching them pretty good. Can we go with just a rapid fire on some of these? Like start out with NVDA, and just get a quick idea from you guys. What do you think of these things?
NVIDIA, yes.
Yeah, NVIDIA. Obviously, a very much of a discounted stock, but certainly one that's supposed to have a very bright future. So something that used to go for 350 and now goes for $100, and supposedly it's used in all these different devices, etc.
Well, in heaven's sake, look, this is really cheap. It's a long-running downtrend here right now. Oh my gosh, it's coming up.
That's why I'm bringing it up.
Yeah, that's really cool. Yeah, they're a good guy.
Yeah. Well, I mean, this is not a fly-by-night company. This company has revenues and stuff, but obviously they have challenges. That's why the stock went down.
Yeah. But this is really interesting. Look at this one. This is so cool because the trend, as you can see, this is what I love in trend following. So example, so you start here with the first trend on, that's the second one here. It was last November here. And then we have this big one, and it's one trend on to the next. This is what I love in trend following because it's so simple, this system, and you just have to follow the trend. This is what you guys doing over there in USA with the Dunn Capital or with Mulvaney Capital, for example. They have almost 100% this year on the profit side. This is how they make money, just following the trends. This is what I'm doing here, what my teacher taught me over the years, 23 years. And this is what I teach my students every day, just following the trend. And now it's a long-running trend. It's really cheap, this price. But we are circling around the normal price. At that NVIDIA, it's 134, the normal price. We're circling around. We came back to this price, and now it's a long-running downtrend. As a trend follower, you're still deep in profit. And if I would look for a new entry, then I need my rules. And I have 4 rules. You need a valid trend, a young trend, and this is not a young trend at all. Then in the correction, and then I need my buy signal like a pattern or balance candle or change of color in Heikin-Ashi. And this is happening not yet. So it will take weeks to see a new uptrend.
I gotcha. The other 2 stocks that are very similar technically is Taiwan Semiconductor, TSM, and Advanced Micro Devices, AMD. All 3 of those things, because of the news with Biden and his chip war, and also some revenue contractions have caused these things to be significantly discounted. But I just thought they'd be interesting to at least look at, since they are very, very much near their lows of current price anyway.
Yeah, look at this one. They're saying the wonderful, lovely downtrend, really old right now, but it's a kind of different to NVIDIA because the fair price is up at 118 and we are on 65. So this is really, really cheap, and prices are following the seasonal system also. So I guess this could be really interesting because if you can see that it's a kind of divergence here also. So I would say long, but if you have rules for this, by the way.
Yeah. With regards to Tesla, TSLA, what are you thinking there?
Oh my gosh. Tesla.
It entirely depends on what Elon says next.
Right.
Depends on Elon Twitter's here on the Twitter feed. Yeah. So we are, I don't expect so much from Tesla because we reached a fair price 226 right now. And actually it's a kind of downtrend, but on the right side of the chart, there is also a lovely uptrend here right now. And we are deep back in the correction, but without a break of this uptrend. So we see this kind of stabilization the last 2 days, and it could be really, really cool buy signal for Tesla for the next days. So maybe if the price is going up to 226.
Yeah. Sonny, I'm going to give you the FANG stocks. Let's take a look at Meta, META. That's another one that has been, well, you know what a guy said I was reading, he said, Meta is like Coca-Cola when they came out with New Coke, because they were having trouble competing with Pepsi. These guys were having trouble competing with TikTok. So they come out with the new idea. The difference is Coke, after 7 months, killed the idea. And this guy seems like he wants to ride it into the sunset. So,
well, I don't know so much about that. I'm not going to join that metaverse. I'm not going to walk around wearing,
and the new product that he came up with costs $1,500 or $2,000. So, I mean, he said there's a cheaper version coming, but who knows when. But anyway, the chart does look like it may have made a low at 120. And what do you think?
Now, I don't think it's through moving down. I don't think that's a low yet.
Okay. Yeah.
I think we've got more room on the downside. You know, I'm convinced that we are in a recession and have been for some time.
Yeah. It just hasn't accelerated yet.
It hasn't accelerated well. I mean, we're pretty far down. 20% down is not bad.
But I'm saying these houses are down 5% or 10%. When the recession really is obvious, we're going to have a 20 or 30% hit, maybe. You know what I mean?
Yes. Yeah.
And then, like I say, even here in Las Vegas, some of the casinos are now saying they are getting a little bit slower. Well, it's going to go from a little bit slower to a lot slower by the time the thing's done, right?
Right.
Yeah.
I agree with that.
Anyway, let's go over to Apple. The apple of your eye, AAPL.
Oh, I need a new iPhone, I guess.
Yeah, you're one of the 350 million people who haven't upgraded, right?
Yeah, I need a new iPhone. Mine is 2 years old right now. I need a new one.
Oh, I saw a report yesterday that credit card debt's about as high as it's been in a long, long time. And I think that if they're going to buy a new iPhone, they're going to have to do it on credit cards.
Yeah.
I don't think that very many people have a lot of discretionary money at the moment.
No, I mean, everything is, you know, and then Kroger just bought Albertsons. So if you think you're going to get a bargain at the grocery store anytime soon, that's out the window.
I get that.
So anyway, you see Apple and, you know, you think it might have a little bouncy here, or what do you think?
I do.
Yeah.
I think we've got to bounce right up to this red line right here, which is at the DMA midline.
Right.
147, I think, is where we're going next.
And how do you feel
That's
about
it's 5 points, but
yeah, so a little bit of a bounce. Well, this Google got kind of cheap, went under 95, and now it's bounced back to 100.
Mm-hmm. And
all these things are fighting. Yeah,
I think that's got further down to go too.
Yeah, I mean, they're all
right
fighting.
Now, let's get this red line right here. There we go. It's down 55% from its all-time high.
Yeah.
So
And
that's significant.
yeah, oh yeah, and it's also like I say, it is pretty far away on a longer term basis from some of the moving averages, so it could be an attractor. And then what about Amazon? We're going into the season here.
It's true. I just sent my third grandson a birthday present with Amazon, so
Yeah.
I know people keep buying that thing. With
That's probably why it's
Amazon
popping.
Prime card.
They found out you put your order in and the stock turned around.
That's it. That's it.
But it looks like it could pop a little bit, huh?
I think it's going to go on down to see those two yellow dots right there showing the ideal turning points for the trends.
Uh-huh.
Those are automated, by the way. That's called my PHW indicator. I think that's the level we're going to test. 101.59 on my chart.
What about the Netflix, NFLX? They're saying they're off the subscriber growth, and now the new model is, people who share the service are going to pay an extra fee, I guess, or something like that.
Right, and we're going to get commercials.
And commercials.
Yeah. So
this one looks like it might be coming on a little bit, huh?
It looks like it could. I think it's heading for the 200-day moving average, which is right here. It's under it right now.
Yeah.
I think it's going to test that. If it breaks above it, then we're going on up, but I don't think it's going to do it.
Now, there's one that I've been kind of putting my foot in the water at 15 and 16 bucks. And it's also a holiday thing called Macy's M. And if you look at the numbers on it, they pay 3.5% dividend. The P ratio is 3 or 4.
Oh my.
And, I get people sending me stuff from Macy's all the time. It seems like they are very efficient digitally. And they're in a lot of the malls and everything. So what are you seeing here? Is there a little bit of a turn coming up here? Or what do you think?
Well, I haven't been to a mall in years. Do they have a good digital?
Oh, yeah.
supply
You all kinds of online, and their delivery is like really prompt.
Okay, then it could go on up.
And it's a legacy name, I mean, and
It is. It is.
But it used to be 38 bucks and then it goes down to 15 bucks. That's a pretty good drop.
That's a pretty good drop, but I don't know that we're done.
Yeah. Does it look good on your sunny bands at all, though, that it might be turning up?
Oh, it looks sideways on the sunny bands. It doesn't look like it's going to do anything but tick around through those two sunny bands that are sideways. So it'll go up to here and down to there and up to here.
Yeah, it really would have to get above 20 or something, wouldn't it?
It would have to get above 1877.
Yeah.
Mm-hmm.
Now it's at 1835. It's not a mile away.
It's not.
Yeah.
It could do it.
All right. In the remaining moments, I'd like you guys to explain again how people can get a hold of you, exactly what you can do for them when they do that. And also if there's any free offer or special deal you guys got, this would be a great time to present it. So we'll start out with Markus. Again, just a quick background on what you can do for people, how they can get a hold of you. And if you have any special offer, this is a good time to extend it.
Yeah, of course. What I can do, my job is to make people happy, because we need more happiness in this world, and trading can make people very unhappy. So, and I know a way, and this is what my teachers taught me over the years, especially my spiritual mentor in the last years, to make people happy. And if I can show them how they can be happy with trading by sticking to rules and being disciplined all the time, this is what I can show the guys here and our listeners. But it's just only the rules. And trading is not an art. Trading is not guessing. Trading is a job. Trading is craft. It's really normal job and craft. And everybody can learn it because everybody is able to stick to the rules. And as my teacher taught me, you need a strong why to do this. If you want to become disciplined, you need a strong why. Or as my teacher said, if you don't cry for your why, then it's not your real why. So if you find your real why, then you are disciplined enough to stick to the rules all the time. And this is what I'm doing. And to tell people you need a mentor. You can learn it by yourself over the years, but you will lost so much money and you will lose so much precious lifetime. And we don't have so much lifetime left. And this is what I do to teach people how you can become successful and happy with trading. And the offers on my homepage, how-trading.com. The logic course, online logic course, really cheap. And if you grab the logic course, I make you the gift to get 4 coaching hours with me for free.
Oh, that's outstanding. So definitely, people should take advantage of that. And again, the peace of mind with having a discipline really cannot be overstated, because the anxiety and everything out of the trading comes in either from your sizing is incorrect because you're just willy-nilly putting on different size trades, or you don't really have a discipline. So you're kind of emotionally crazy because you don't have a strict plan, right?
Yeah, that's true. You need this plan because we are living on the right edge of the chart, and we always living with these unsecure things. And our mind is not made for this stuff because our prefrontal cortex is always overwhelmed. And you only can think 4 thoughts at the same time. And trading is way of overwhelming. And then the limbic system is dancing salsa and tango with us. So, and then you lose the logic thinking in trading. And this is why the people are getting emotionally and why they lose money. So bring it back to logic and then bring back to, then people can become successful.
Yeah. Keep it in perspective. That's the main thing.
Yeah.
Okay. Sonny, again, some of the things that people can benefit by reaching out to you, and also any special things you'd like to offer.
Yeah, as I said, I've been a professional trader now for almost 42 years. I love to teach people how to trade. I do mentoring, tutoring, consulting, one-on-one coaching. I have a correspondence course that I offer. I'm an easy language programmer for TradeStation. I'd be happy to do custom programming for you. I'm the author of 6 best-selling trading books, and I'm working on my 7th, almost done. I have a free Sunny Side of the Street Sunday night newsletter. And I forgot to say this in the beginning, a free live trading room on Tuesday mornings. I offer free forums and a free podcast. And as I say, I love to teach people how to trade. If you go to moneymentor.com, my phone number is right on the top. Give me a call.
Great. Okay, everybody. And as far as optionprofessor.com is concerned, our website, basically, we do have a PDF report on how to use options as a hedge against market declines, which obviously has been very helpful this year, but also how to hedge against upside surprises, which has also been very helpful this year. So I can explain how you can get those PDF reports by going to optionprofessor.com. Okay, you guys, thanks a lot for being here today. I think we went over a lot of good information and we exposed a lot of markets that may have some big potential. So that was great. So thank you very much, Marcus and Sunny, for being here. Very helpful, and we look forward to doing it again. I'm going to send it back over to David Kosmeter right now. Thanks a lot, everybody, for being here.
Thanks a lot, too.
All right. Yeah, thanks. A ton of good info today. So just a quick reminder, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And you can also just go to TimingResearch.com to get access to the recording of this show as soon as I can get it posted, as well as any past Timing Research show or event. So I just want to thank my guests again for today, Markus Gabel of DowHowTrading.com, Sunny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you, David.
Thank you very much.